When dealing with stocks, sometimes we're faced with the challenge of trying to decide between two or more stocks for investing. I know this happens a lot whenever I'm trading options, and I need to figure out which option trade is the best one for me. Should I go for the stock with the higher share price? Or should I go for the stock that pays the higher option premium? Or both? Or neither? Hey stock hackers, I'm Jim Ray and this is Simple Option Trading, where I share my stock investing and trading strategies so that you can learn and earn more. After all my years of trading and investing, there's one thing I know for sure. It's that the higher stock price or premium payment doesn't always equate to the better investment. Don't believe me? Let me walk you through a real life example and show you exactly what I mean. So taking the results from a one-button stock screener, you can see that it found or identified 14 companies and their stocks that meet my criteria. And something caught my eye. So in case you don't know, I'm a pet owner. I've got a little dog. And so what drew my eye is that I saw two companies on here that I'm very familiar with just because I do buy food and supplies, toys, and things of that nature for my dog. And the two companies I'm talking about are here, Petco Health and Wellness Company Incorporated, stock symbol WOOF. And the second one is Chewy Incorporated, which is an internet retailer for pet food, pet supplies, toys, and things of that nature. And their stock symbols CHWY. Now, as a pet owner, I've used both of these companies. I'm a customer of both. And if you know anything about pet owners, we tend to go overboard with our pets because, they're a part of the family, so we treat them like our own children. And what's interesting to note, if we take a look at the thumbnail for these particular stocks, you'll see that they both seem to be in a downward trend. So here's Petco. And then here's a thumbnail of Chewy. We can see they're both on a downward trend. But like I said, because I know pet owners, because I am one, I know that we spare no expense to buy things for our pets. And so I'm anticipating that this is an anomalous condition, that both company stocks are oversold. So based on my opinion that both of these stocks are in an oversold condition, I wanted to see if I could use them in order to do some stock option trading. And this is the perfect opportunity for me to illustrate comparing two different stocks for options trading. So first, let's take a look at both stocks from a high-level view. So I'm going to go over to Yahoo Finance, and let's take a look at the first one, which was the Petco, stock symbol WOOF. And from here, we can see Petco is currently trading at $3.83. They have a market cap of just over $1 billion and an average share trading volume of just over 4.1 million shares. So there's plenty of liquidity there. Lots of people in the market buying and trading this stock. And as it turns out, the industry analysts give this stock an estimated one-year price target of $6.62, giving this stock an upside potential of just over 72%. So not bad. So you'll notice that the company and the stock do not pay any dividends, so that's unfortunate. But that's okay. That's not going to stop me from taking a look. Now, if you're not familiar with Petco, let's take a quick look. We can see that they're in the specialty retail. As I mentioned, they do pet-based products, food, things of that nature. Now, the company operates as a health and wellness company focusing on enhancing the lives of pets, pet parents, and its Petco partners in the United States, Mexico, and Puerto Rico. Now, the company provides veterinary care, grooming, training, telehealth and vital care, and pet insurance services, as well as veterinary services through their Vetco mobile clinics. It also offers pet consumables, supplies, and services through its petco.com, petcoach.co, petinsurancequotes.com, and pupbox.com websites. Now, the company was founded in 1965, and it's headquartered in San Diego, California. So let's jump over and take a look at the financials for Petco. So I'm going to click on Financials from Yahoo Finance, and we can see that we're presented with the income statement, the balance sheet. Let me scroll up a little so you can see it better. And then also the cash flow statement. So here I like to take a look at all three of these items to give me some information about the financial health and well-being of the company. So Petco, as I review the financials, they look pretty good. So I feel pretty comfortable that the company's on solid footing, so to speak, from a financial standpoint. Now let's take a look at what the industry analysts forecast. They There's 4 industry analysts that have provided recommendation ratings, and all of them give a strong buy recommendation. Now let's jump over to a daily chart going back 1 year to late September of 2022. We can see that the stock has definitely been on a downward trend. Now, as I mentioned, I'm not too worried because I know that pet owners will continue to spend money on their pets. So I think this stock happens to be in an oversold condition, and I'm anticipating that the stock price will move higher. In fact, let's go ahead and take a look at the moving average. So I added the 20-day simple moving average to the chart, and it's shown as the blue line, and we can see that the stock is currently far down below the 20-day moving average. So again, that's another indicator for me that the stock might potentially move back up to the average price, right around, see the moving average right now is at 474. So I think this stock probably has some upside potential, not only for the short term, but for the long term. I activated my trading platform on my brokerage account so we could take a look at the option chain. Here's Petco Health and Wellness, stock symbol WOOF. And I'm going to take a look at the option chain by pushing trade wolf options here. And I'm interested, say, in selling a covered call. And we're going to go, looks like we'll go 1 month out roughly. So October 20th, which is 28 days. And so if we pick the $4 strike price, we can see it's currently paying 20 cents per share as the option premium. That's great. We've got the numbers we need for Petco. We know its current share price. Plus we found an option from the option chain and the values associated with it, so we can use it for our comparison analysis. One of my secrets for profitable trading and investing for wealth is my one-button stock screener. It's literally the first tool I use whenever I sit down for a trading session. It helps me narrow down the list of over 8,000 available stocks and find good candidate stocks and ETFs that'll help set me up for profitable option trades and long-term investing wealth. This PDF file contains hyperlinks that are pre-programmed with targeted criteria that automatically activate a free stock screener in your web browser. You just push a button on the link and you'll get a list of stocks that you're looking for. Find stocks that are trending higher. Or maybe you want to see stocks that are recommended by professional industry analysts. Or even stocks that pay you larger premiums. Now, who doesn't want that? So join my newsletter and get access to download my free one-button stock screener. Head on over to stockhacker.com. Hey, now let's go take a look at the other company I was talking about, Chewy Incorporated, stock symbol CHWY. And this is an online retailer. They don't really have brick and mortar stores. So Chewy Incorporated has a market cap of $7.7 billion and an average trading volume of just over 5.4 million shares. Again, plenty of liquidity here, so lots of buyers and selling of this particular stock. Now, the industry analysts give this stock an estimated 1-year price target of $36.79, giving this stock an upside potential of just over 100%. So that's pretty encouraging. But you'll also notice this company and stock do not pay a dividend, which is unfortunate, but that's okay, as I mentioned before. Now, if you're not familiar with Chewy Incorporated, you can see that they're considered in the internet retail industry. And Chewy Incorporated, together with its subsidiaries, engages in the e-commerce business in the United States. Now, its focus is to provide pet food and treats, pet supplies and pet medications, and other pet health products, as well as pet services for dogs, cats, fish, birds, small pets, horses, and reptiles through its retail website, chewy.com. Now, the company was founded in 2010, and it's headquartered in Plantation, Florida. Now let's jump over to the financials for Chewy. So I clicked on the financials from Yahoo Finance, and we can see again the income statement, balance sheet, and cash flow. And again, I like to take a look at these numbers so I get a better understanding of the financial footing and foundation of the company. Next, we'll take a look at the balance sheet, and I'm seeing some good numbers here. And then also the cash flow statement. And this one also looks good. So I think from a financial standpoint, the fundamentals of both companies, I think they're both on solid footing and they're moving in the right direction. So I like that as an indication of, from a long-term investment. If I'm holding these stocks, I can feel confident that these companies are operating in a reasonable and profitable fashion. Let's go ahead and take a look at the chart for Chewy. So input the symbol here, and here we can see a daily chart going back 1 year. And again, you see that the stock price is far below the simple moving average line, the 20-day moving average. And so I think this stock also has the potential of moving higher because it is in an oversold condition. Now, if we wanted, I can do a comparison. Let me go ahead and close the simple moving average line. Let's do a comparison to see how Chewy and Woof actually, Petco, Woof, to see how these two companies, their stock prices compare. And if you'll notice, the candlestick chart is for Chewy, and you can see its trend moving up and down. And ever since, looks like mid-June, this stock has been on a downward trend. And the orangish line below is where I've added Woof as a line chart, so you can see its stock price. And again, like right around the June-July time frame, Woof has also been experiencing a downturn. Now, we can see as of today, Woof is down 69% from its 1 year price, whereas Chewy is only down minus 45%. So in both cases, these stocks are trading a lot lower than they were a year ago. Now let's take a look at Chewy and see how it compares. So this is stock symbol CHWI. And to look at the option chain, I'm going to press Trade CHWI Options. And I'm interested in selling a covered call. And we're going to go 1 month out, so October 20th. So we do a comparison of the same. And we can see with the $18.50 strike price, it's currently paying 83 cents per share as the premium. And with that, we now have the share price of Chewy, and we've picked an option in the option chain and the values associated with it. So now we're armed and ready to go to do our comparison analysis of trading these two different stocks as part of an option trade. Now the next thing to do is to perform a comparison of using each of these stocks for some options trading. So the first stock we saw, symbol Woof. I'd be interested in selling one covered call, and the expiration date is October 20th, so the length of the contract is 28 days, and for the strike price would be $4, and we saw that it was currently paying 20 cents per share as the option premium. Now if I were to purchase these shares today, I'd pay $3.84, and using that as my cost basis, if my option contract were to get exercised, I would realize a price appreciation profit of $16. So that's the $4 strike price, subtracting my cost basis of $3.84. So that would give me $1.60 per share, times the 100 shares gives me the $16. And that would be a return of 4.17%. And then also keep in mind, I would also receive a premium payment of $20 just for selling the option contract. And that's a return of my initial investment of 5.21%. So best case, let's say I sell the covered call option, it gets exercised on the expiration date, and the total money I would receive from this trade would be $36. And that's a return on my investment of 9.38%, which is an annualized return of just under 85%. Now let's go ahead and take a look and perform a comparison using the other company stock, Chewy Incorporated, stock symbol CHWY. Now again, we have the October 20th, 2023 expiration date, so that would make the length of the option contract also 28 days. And for our strike price, we'd use $18.50. And for the option premium, we saw 83 cents. So my cost basis to purchase the 100 shares today would be $1,809, or $18.09 per share. And so if the option contract did get exercised, I would receive $18.50, that's the strike price, or $1,850 minus my initial investment of $1,809. And so my total price appreciation profit would be $41. And that's a return of 2.27% based off of my initial investment. Now for selling the covered call option contract, remember I'd receive a premium payment of 83 cents per share, which equals a total premium payment of $83. So that's 83 cents per share times the 100 shares. So that's how I get the $83. And so that's a return of 4.59% based off my initial investment. Now, if this option contract that I sold were to be exercised on or before the expiration date, well, the total cash I would have in my pocket would be $125. And that represents a return of 6.91% based off of my initial investment, right? If I purchased the shares. And so that's an annualized return of 62.47%. So let's take a look and see how the two stocks compare. Well, we can see on a side-by-side basis all the numbers. And based off of our calculations, we can see that Wolf has the potential for being the highest return on investment at 9.38% versus Chewy with only 6.91%. So even though stocks of Chewy had the higher premium payment for the options, the stock with a better return rate was actually Wolf, which was a lower price stock and also had the lower premium price per share. But overall, the better return would come from investing in Petco. As long as we're here, let's take a look at one more scenario. Let's take a big company like Apple and compare how selling a stock option using Apple shares would measure up to either Petco or Chewy. So here we can see I've plugged in shares of Apple, which are currently trading at $174.79. And if I were to sell one option contract, I would need to own 100 shares. So that's a cash investment of $17,479 to own those 100 shares. Now I'm picking the same expiration date, October 20th, making the length of the contract, again, 28 days. I used a strike price of $180, which was currently paying a premium of $2.30 per share. Wow, that's huge compared to the other premium payments. But hold on, let's take a look at the numbers and actually see how they measure up. So if the option contract were to get exercised, I would receive a payment of $180 per share. Now, based upon my cost basis, that would give me a total price appreciation profit of $521, which equates to a 2.98% return on my investment. Now, let's not forget, for selling the option contract in the first place, I'd receive a premium payment of $230, and that represents a 1.32% return on my investment. So in the best case, if this option contract were to get exercised on or before the expiration date, the total cash profit to me would be $751. Whew, that's a lot of money. And especially when you compare it to the total profit from the other two companies, right? So Petco, I'd only realize a total profit of $29. Chewy, I'd only see a total profit of $119. But with shares of Apple, that's a total profit of $751. That's huge. But hold on. Take a look at the actual return on the investment. What's the total profit percentage? So that's $751. That represents a return of 4.3%, which is almost half of what I would get in the Petco investment. So as you can see, just because Apple's a huge company with a huge share price, it doesn't always equate to being the better return on the investment. Now, obviously, there's a lot of factors to consider here. Apple's been around for a while, and by the looks of it, it's going to be around for a long, long time. Whereas with Petco and Chewy, now, like I said, I'm certain that pet owners will continue to pay big money for their pets. I'm just not sure these companies are as stable as Apple. So that's another factor to take into consideration. One of my secrets for profitable trading and investing for wealth is my one-button stock screener. It's literally the first tool I use whenever I sit down for a trading session. It helps me narrow down the list of over 8,000 available stocks and find good candidate stocks and ETFs that'll help set me up for profitable option trades and long-term investing wealth. This PDF file contains hyperlinks that are pre-programmed with targeted criteria that automatically activate a free stock screener in your web browser. You just push a button on the link and you'll get a list of stocks that you're looking for. Find stocks that are trending higher. Or maybe you want to see stocks that are recommended by professional industry analysts. Or even stocks that pay you larger premiums. Now, who doesn't want that? So join my newsletter and get access to download my free one-button stock screener. Head on over to stockhacker.com.